we're here today to talk about the Australian Nationally Determined Contribution announcement for 2035 and the NDC and Investment Blueprint. We have an initial address from Mike Kaiser, the Secretary of the Department of Climate Change, Energy, Environment and Water. Great to hear from you. Please come up, Mike. Thank you. I'll then introduce the rest.
Great. Well, thanks very much. You'll shortly hear from my very, very capable and far more knowledgeable than me Deputy Secretary, Kushla Munro. But I thought I'd make some introductory comments. So, look, it wasn't that long ago, and you'll recall the time too, that the word transition was actually quite controversial in Australia. And particularly as a Queenslander, it was only really 5 years ago that people were really debating whether or not the word should be used because of the concerns that were associated with it in terms of jobs and investment. We've obviously come a very long way in the last 5 years, and it's absolutely clear now, unarguably, I think, in all rational places, that the transition is a source of jobs and is an opportunity for investment. In fact, when we did the NDC work, Treasury, the Australian Treasury, modelled the impacts of net zero and the path to net zero and said that there were risks in not pursuing net zero in terms of the jobs and investment opportunities and the growth, economic growth for the country. So we seem to have come a long way in the last 5 years in terms of our understanding about that. There's a couple of things that, that occur to me. That shouldn't really be surprising that that's the case, given that the transition requires the entire retooling of the Australian economy. And while there's a lot of focus on the energy sector and a lot of activity happening there, the 6 sectoral plans that the department produced on behalf of the government really demonstrate that this is economy-wide and that the opportunities, therefore, are economy-wide. But what do investors need in order to, to create investment certainty? They actually appreciate a strong target. Tick, we have that. They also appreciate policy certainty. And I think that the blueprint that Kushla will talk to you more about provides that policy certainty. And if you look at it along with everything else that the government is doing, including the work of our special investment vehicles like the CEFC and ARENA and the work of Austrade who are around here in these forums, you can really see that the Australian government is taking a very proactive role, a very hands-on role in driving investment and ensuring the benefits for the Australian people of the transition. So that's all about, you read between the lines, to use some colourful language, it's all about making sure that we tilt playing fields, we don't just level them, make sure that we tilt them in ways that favour the country. It also means that we crowd in investment, and it also means that we create markets, not just fixed market failures. So I'll leave Kushla now to see if she can not contradict me, which is a nice reversal of roles for us.
Nicely done. Thanks so much, Mike. Thank you. So, hi everyone, my name's Anna Hancock. I'm an Executive Director at Pollination Group and I chair the Renewable Energy Alliance and I'm on the Clean Energy Regulator Board and I'm very for the transition at hand. I'd love to introduce my fellow panellists to come up and say a few words. I have the fabulous Kushla Munro, Deputy Secretary, of DQ, and charged with not contradicting Mike. Excellent. We have Frankie Muscovic, Executive Director Policy of the Investor Group on Climate Change, so plenty to say on the investor appetite. And we have Heech Sung, Executive Director for Natural Capital at the CEFC, Clean Energy Finance Corporation. Welcome all. Maybe I can hand out some of these.
Thank you.
Yeah, fantastic. So, Kushla, leading straight in from that introduction, before we talk about the investment blueprint, can you say a couple of words about Australia's nationally determined contribution, our 2035 target, and how it's been received by other nations?
Thank you so much for convening us today, and what a great panel to be on. Honour.
Loving that. I'm loving it.
working?
Oh,
Oh, can't hear me. Go closer.
Great, go closer.
I just said, what a great panel to be on. I'm super proud to be here today. I mean, one thing that has been said a number of times about our target, it is both ambitious and achievable. And it has been a really proud moment in actually my career to be able to help shepherd, the NDC along. But more importantly, I was in New York for the big Climate Ambition Summit. So we launched it in Australia. And then this point about how has it been received internationally, just incredibly well. Because what it represents is a country that takes it seriously and has done the work with business, all other stakeholders in Australia, and kind of has that strong backing. But what it also means, it is genuinely a really strong target, and it's going to take a lot of work. That's the truth, but that's what you've got to do to get to net zero. And just maybe one thing that I would draw from, from some meetings that we've had here. Just a great example is what Korea is doing. So they've just put out their new NDC. They've gone sort of from a single-digit reduction from 2030 to a new range from the 30s to the 40s. And one thing that they said to us was we really studied what Australia had done, including the sort of target. How do you set that? How does the government move? But how do you bring private sector with you? And also, and we'll get into a little bit more, but the detailed sort of analysis and work and those partnerships with industry is absolutely critical to them. So, you don't want to say, well, but for Australia, this wouldn't have happened. But it is good when you hear that reflected back and things are shifting and changing, because we know it's just so important that all countries are acting.
We've seen that over the course of history, how important it is for Australia to step into that international role. Can you describe a little bit what that new standing means for the role we're able to play here at COP30 and our place in negotiations?
Yeah, thanks, Anna. I mean, just other countries are genuinely listening to Australia, listening to our ministers, both the Assistant Minister Wilson and now Chris Bowen as our Minister for Climate Change and Energy. When they talk, we're not just saying we're going to do this, we're going to do that. It comes off such a strong basis of what has actually been implemented in our country. And just as an example, I'll just say that when our minister has been talking about the shift and change of what's happened in renewables, for a few Australians in the crowd, the cheaper home batteries program, that has done, and now the new proposal in terms of the solar saver. And if you talk to other countries about actually offering consumers 3 free hours of power, they almost just don't believe you. Like it's just like this extraordinary, like how could that be possible? But it's just this sense of we're not talking about it, we're doing it, and we have plans to build that out and back that in. And again, I'm really lucky. I've sat on the board of ARENA, long association with the Clean Energy Finance Corporation. We also have the new Net Zero Fund, so $5 billion of the National Reconstruction. And it's just, again, it's like regulatory policy frameworks, and then as to not contradict, but to back in the Secretary, this good interventions, like these institutions that are now over a decade long, actually delivering and just working out those pathways. Like, how do you get that deal done? And I'm loving to hear more from Hee-Chung about that, because you just need more and more and more.
Building on the question around our standing at COP, Frankie, I know you're a COP watcher, and we're looking forward to hearing from you and the rest of the Let Me Sum Up podcast tomorrow in your session. But do you have any observations about Australia's standing and what the NDC announcement and investment blueprint means?
Well, this COP tragic has been following the Big Four negotiations the last few days, and what's really interesting about that is that I think you can really tell the partnership that we've developed and strengthened with the Pacific through all of this. So, You're seeing the AOSIS grouping, is always sort of first out there pushing for ambition, and we know there's a clear gap to 1.5. Like, we know the total of the NDCs isn't going to get us there. But like, it's just very heartening, I think, to an Aussie here, and COP tragics amongst us, that in that forum you've got really AOSIS and the Pacific very much as a part of that, but really backed by Australia, calling for ambition aligned with 1.5, and even just in looking at where those negotiations seem to be heading towards, like there does need to be one, like a call to action in the cover text, or what sort of comes through the package from this COP, and and options being floated there around a BLM to 1.5 roadmap and things like that. And I think it's very encouraging to see Australia really backing in the asks of those countries. So it's good for us to be doing that. And I think sometimes, and I would count myself amongst this as well, like, I think Australian stakeholders can and should push our government to keep doing better and more, because as Kushla said, like, we've got a target that's seen as pretty great globally, but there's a lot of policy work we need to get on with to actually get anywhere near close to achieving that. So I think it is always useful to step out of our kind of Australia bubble and see how we're perceived more broadly. And I don't think that lessens the focus of our domestic conversations. I think it should be encouraging us to lean into that leadership role, especially if we're wanting to host, we are continuing to want to host COP next year.
I think also in that recognising First Nations leadership in the region, it's fantastic to see Australia doing that more actively. Kushla, before I turn to you, Heech, I was just interested to hear from you if you had any more observations on the blueprint document. I know you've got to leave at a certain point for another commitment.
Appreciate that. So, as heralded, we have the new NDC investment blueprint that got launched. Actually, we had an investment summit it was only like a week ago, I think. And but part of what we've always said about why would you have a strong NDC, it's because this is what an investment plan should actually be based on. And so, no special magic here. We kind of know that pouring through an actual NDC is not necessarily what the investment houses will be looking at. But this sort of tries to make it a little bit simpler and clearer about what the policies we have, what's the, like we're saying, the special investment sort of vehicles that you can come to and invest in Australia, and just what those strengths actually are. So it's just sort of a simple way of trying to explain what we're about and what we can offer.
Fantastic. And it is that build of the target, the investment vehicles, and we have 5 in Australia, major investment funds, and the policy settings that are so important. Please head off whenever you need to.
Thank you. Okay,
yeah,
I might have to do that.
Yeah, thanks so much, Kushla. Appreciate it. Perhaps I'll move in closer so that I'm not an island. That's a great point to actually zero in on those sovereign special investment vehicles. We have the Clean Energy Finance Corporation, and Heech, I'm really interested in your perspectives about the CFC's role and what it's been able to achieve, because this isn't a investment blueprint that's come out of the blue, is it? It's a build.
Yes, thanks Anna. So for those who are not familiar with CFC's investment mandate and the dollars it's sent out the door to date, we were established just over a decade ago. We've committed almost $18.5 billion with a total transaction value of about $85 billion of projects. And we have investments from everything from robotic tractors, you know, two blokes in a shed up in Queensland building new technology for farmers. We're supporting their growth, to recently investing almost $4 billion into the Marinus Link project, the interconnector between Victoria and New South Wales. So we're a very broad agency that invests across the economy. Of course, renewable energy, battery storage, and for me what was really an amazing sight to see was the Waratah battery on an old decommissioned coal-fired power station. You know, what a stark contrast that we've come. So we don't only invest our own money, we crowd in capital, and we need to crowd in capital because these projects, A, can't be supported with our money alone, but our mandate is to crowd in flows of capital. So on average, for every dollar out the door, we have $3.50 from private enterprises. And so in my sector in particular, it's a bit higher than that. And it's not just capital that our big capital partners are looking for. It's also for our organisation, expertise. So we have a lot of technicians in our business, in addition to investment capability. Plus an awareness of the regulatory framework. And so a lot of foreign investors, large pension funds like the Canadians that are coming into the country, are looking to see who are the people, boots on ground, that can help them navigate all of these targets, these pathways. And so I can absolutely say with conviction that some of these big investors would not have come in but for us being there, and that is direct feedback from their investment committees. So that's the kind of impact that these specialist investment vehicles can have.
And they slot together. The roles of the 5 investment vehicles, for those less familiar, we have a North Australian investment fund, we have an export fund to support our export industries, we have the ARENA, for more early stage and grant making. We have the Clean Energy Finance Corp, and we also have the National Reconstruction Fund. So it's a very supportive ecosystem across those 5 agencies. Reflecting, we have some really major policy instruments to provide pressure on industry to transform itself and decarbonise through the safeguard mechanism. For the power generation sector, we have the capacity investment scheme. We have so many different micro interventions. Frankie, would you be able to describe for us what this means for the energy transition?
Yeah, absolutely. But just before moving on from special investment vehicles, I feel like I've probably said this a couple of times while I've been here at COPS. I actually think we're in a very good position now to stop and reflect on I think the achievement of those vehicles, which has been really significant. And I think CEFC has been one of the more successful CIVs at crowding in private investment. But it's also true that the next 10 years doesn't look like the last 10 years when it comes to the needs for public finance. And so we're doing a bit of work on that, and our kind of research is suggesting that there is a role to kind of pause and retool for the next phase, and that's really acknowledging that Australia is not alone in this. There's a global race for capital to invest in not just an advantage in the energy transition, but also the future industries, including things like a lot of what you've been hearing about here at the Australia Pavilion on green metals and green exports and things like that. And what we've seen to date over the different CIVs, which have been stood up at different times, and there is actually a bit of overlap in the mandates, I think it's fair to say. But there's comparatively less capital going into supporting early stage, VC, higher risk projects. And actually there's some of the things that we absolutely want to be attracting especially with the US withdrawing its support for the Inflation Reduction Act. There are a lot of really innovative climate tech businesses. So, I mean, look, not to get bogged down into a conversation around risk-return profiles for CIVs, but we certainly think there's some work to do in acknowledging the really great work that's happened to date, but also how do we set them up for success
What
into
it's
the
gonna
future?
take.
Yeah. And
Yep.
and I guess on on energy transition specifically, I mean, Kushla said, it's an ambitious target, but there's a lot of work to do, and current policies are only going to take us to, and that's if they don't change and continue, we're only going to get to about 51% reduction in 2035
In greenhouse gases.
in greenhouse gas emissions. So to get anywhere near the range of 62 to 70%, new policy is needed, or more ambition and ratcheting of existing policy. And what we're hearing from our investor members when it comes to energy transition is that the moves from various state governments to look at extending the life of coal-fired power stations is going to be increasingly problematic in the energy sector in the absence of a carbon signal. So on the one hand, we've got the safeguard, which is driving down emissions in those regulated facilities as a specific carve-out for the electricity sector there at the moment. And then we've had this very comprehensive NEM review process being led by Tim Nelson and his team. And that is, sort of looking at underwriting the, much sort of longer term back end of contracts into the future. I'm kind of worried about the handshake between the capacity investment scheme coming off
and the future NEM.
and whether it's the ESEM or a rebrand with a better acronym of that.
So electricity market mechanics and what the revenue outlook is for energy assets. Yeah.
But effectively a mechanism to underwrite the later years of long-term contracts. If that's to happen at a time where you've got state governments continuing to say, no, we're going to run coal to their technical lives or, all that, that's not a great recipe for investment, actually.
Yeah.
And whilst I think, the NDC that Australia has is very strong, like the one message, the crystal clear message you could take from that target and reading the investment blueprint is the energy transition underpins everything else across the economy. We've got the electrification of transport, of the built environment, of infrastructure. So many sectors depend on the energy sector to get this right. But there is no guarantee that investment coming into Australia needs to stay here. And so other countries that are putting in attractive settings, they are advantaging, investment in renewables from a tax perspective, or really sort of streamlining approvals. Like that's another thing we consistently hear on how long it takes to get approval for energy projects up in Australia. All of that could work against us a little bit in that time. So I think there is a need in the near term to really kind of provide that assurance, and we'll be looking at the review of the safeguard mechanism as one opportunity to address that, but there's definitely some policy work to do there.
It does seem that for the innovators and investors, what they most prize is a demand-side revenue signal. And so whether it's contracts for difference or something that stimulates market offtake, that's got a particular potency. When you're talking about the dependence of the adjacent sectors on the power system, it's always important to caveat that by saying you don't want to go slow on all the other sections of the economy. You don't want to wait for a perfect power system before you transition your energy and industry. We can do it all, but absolutely, they're very complementary. Absolutely. I want to turn to Heech in just one more. I was going to sneak in a bonus question that was adjacent. I am interested in particular in electrification. What are the investment signals that you're seeing on the electrification part and fuel switching part of the energy transition?
I think it's a really exciting period for Australia, and I was just really heartened. I don't know if any of you watched Minister Bowen's national statement delivered in the plenary yesterday, but the maybe new information or the nugget that I hadn't heard before was his line that we're in the decade of electrification. And I think, many stakeholders who've been working in this policy area for some time have certainly known that for a long time. So, and I think when you think about Australia's energy transition, and I really kind of like reflecting on the point that Mike raised actually at the outset, which was the treasury modelling that really kind of demonstrated the consequences of the choices we make in the next little while. And in the scenario that they've modelled that looks at a disorderly transition, where there isn't clear policy direction in the near and medium term, what that is likely to drive is a lack of investment certainty in renewables and energy transition projects, and therefore a much higher reliance on the use of gas for electricity production in the near term, resulting in quite substantial cost increases for people's energy bills. So I think in the context of the different sectors and the outlooks there are sectors that are ready now and have been for some time. We don't need new technology to decarbonise Australia's buildings. Heat pumps are 300% more efficient than gas boilers.
And sometimes better than that.
And sometimes better than that, so maybe I'm being conservative there. What is lacking is the policy drivers to see that adopted at scale. So yes, there are investments at the institutional level, but when you think about the transformation that has to happen there, you're talking about millions of households across the country, and over 1 million commercial buildings need to make that decision. And institutional investors like super funds, like global asset managers, they need scale to invest in that. So they're definitely attractive investments, but we need to look at how we aggregate some of that up. And the CEFC's actually done some of the really great early work on pushing that sector into electrification. So there's huge potential in that.
Fantastic. I am going to pivot and talk a little bit about the nature and carbon credit, natural systems work that you lead, Heech. I was interested from the perspective of the investment blueprint, the NDC packaged with the policy settings that we currently have. Can you comment on what that means for nature and what the enabling environment looks like more broadly for the investment work you do?
Thanks, Anna. And I think it's right, and Saul Griffiths talks about this a lot. We need to electrify. But there are certain sectors that electrification won't get that sector to a net zero outcome, right? There are like energy transition alone won't help every key sector, particularly in countries like Australia where we are resource, our economy is so based on resources. So agriculture, even, when you think about transportation, heavy vehicle, that requires ag feedstocks to be able to go into low carbon liquid fuels. So there's a real requirement for natural capital assets to sort of be part of the asset mix when you're thinking about decarbonisation and the NDC and also the sectoral pathways. So, to answer your question, the carbon markets, it's fair to say, it's still developing in the sense that it's not highly liquid. A lot of the transactions are over-the-counter transactions, they're private transactions. We don't have a central exchange. But I will say this, there is the certainty of the safeguard mechanism and the certainty of the ACCU methodology framework has given the investors we certainly speak to, and these are large asset allocators from both Australia and overseas, confidence that they will be able to invest in land-based projects where a portion of the revenues will be delivered through carbon credits. And it's really important that the carbon markets step in to enable sectors where the greenfield projects are very uninvestable because all of the cash flows are backdated. So new plantation forestry can't do it without carbon markets. And I think when we're talking about natural capital restoration, how do you monetize that, right? And at the moment, the Nature Repair Act has a methodology that stacks onto an environmental planting carbon method. So the potential cost delta and also the pricing delta of that certificate gives investors some sort of price discovery on the cost of that natural capital project. So these instruments are really important when you're thinking about broad sectoral transition where land use is so important. Some farmers, some assets in degraded parts of Australia, it is more profitable to put a solar farm on there and to gain a lease payment. It's just more profitable. So giving farmers flexibility, giving landowners flexibility to monetize the natural resources differently through mechanisms like the carbon markets, biodiversity markets, nature repair markets, is where we also need to think. And we shouldn't backdate it, we shouldn't back-end it. If you look at the NDCs, there's a really intensification of, generation in the next 5 to, 10 years, and then there's, electrification, usage of industrial decarbonisation, and then there's the ag and natural capital sector right at the end. And I think that's just a reflection on where we are with technology and the cost of technologies. But we need to, if we want to use natural capital as a way to transition better and, quite honestly, to involve First Nations in Australia, we have to start thinking about those investment strategies and the regulatory frameworks that support it today, not in 2035.
Don't just do power generation and then come to nature. We need to be working on everything. Frankie, you wanted to add?
Yeah, I completely agree with that. I think there's an interesting tension in some of this, right? Because on the one hand, and you said, projects are uninvestable unless there's a carbon market attached to it. And at some point, there's likely to be a handoff between, an investment you might be attracting, interest in on the basis of the carbon credits attached to it. But ultimately, in the longer run, it's probably the biodiversity and the broader nature pitch that actually has the utmost importance. I guess the word of caution, I think we absolutely do need to be focusing on these two things at the same time. But I also would sort of want to point out is that Australia's NDC has a very large residual emissions left that requires action on land. And I would argue that there are significant opportunities in electrification that are still left on the table in some of those sector plans. So I think we absolutely need to be gearing up the infrastructure and the project pipelines for it. But the science is important on this too, right? And so where there are near-term opportunities to electrify, particularly methane emissions, which are hugely harmful in the short term. They have 84 times the global warming potential of CO2 over a 20-year time frame. So it's not the same thing to say we'll just use carbon credits on that, where there are technologies available right now to electrify and eliminate those emissions. So I think we can and need to be chewing gum and walking at the same time. But I think when I look across those sector plans, there are opportunities for deeper electrification. And in some of those sectors like heavy transport, you just have to look at what China is doing with electric trucks. Like the the innovation curve on batteries is really stunning, and so I think it's very likely that we're probably underestimating a little just how much of the economy could be electrified over that medium term. And so I think it's really important we put the effort in to pursue policies that support that, but knowing that there's likely going to be a bit of a cost premium up front for some of those more speculative technologies.
It's a really, really great point. When I look at industrial heat, which as a category is something of the order of 15% of Australia's greenhouse gas emissions, there are technologies that are no longer nascent. They're demonstrated in other markets, and increasingly we're looking at opportunities here in Australia, enabled by our target, our investment supports, our CIVs, our policy settings, but also enabled because of the characteristics of our wholesale energy market, which has this intraday characteristic of this enormous cost difference between high and low cost that makes battery storage and industrial heat all that more favourable. So there are layers of value.
I might just add a comment to that, and on the technology versus economic, rationalism. So I'll give you an example. Australia has, quite a lot of greenhouses that have been developed for intensive food production of horticulture and fruit and berries. And a lot of those greenhouses are concentrated with a few owners and operators. And most of the emissions actually don't come from electric use, energy use. They come from the heat, the boilers that they need to enrich the greenhouses. And a lot of that is still, coal-fired, would you believe, coal, and also gas. Now, to convert it, the technology's here. The Dutch do it, right? But for us to step in and replace that, which is eminently doable, the investors take a haircut on the returns. And so there's a real reluctance to do it. So I think we have to also find ways to reset our return expectation if we want to accelerate the transition, or we have to provide different incentives to be able to do that. So that's a really clear example of we could pretty much address most of the emissions in glasshouses in Australia if we just replaced one heat source.
It's a great point.
My cheeky comment there is that if we had a carbon price across most of the economy, maybe the economics would look a little different. I know that's not up to you, though.
Nicely played, Frankie, nicely played. I was going to zoom out from this part of the discussion, which is focused on the incentive environment within Australia, to take a look at what the incentive environment is for leading innovators and investors to come to Australia with our open front door and the blueprint for investment, summarising really the conditions that we see in played out in real time in Australia. I was involved in the last week, Pollination, in concert with the Commonwealth Government and Boundless, hosted a major American clean industry delegation. We had over 13 companies come from America with a technology edge, an IP, ability to look ahead at manufacturing opportunities that might stimulate jobs. And I saw play out their immediate response to the outlook that we have of stability, of commitment to the targets that we've set and to the supports that we've described. And it was an enormously positive experience. Australia is very, very attractive. And we have examples of ARENA partnering on, I think it's Next Tracker and Luminous as examples that have received, in concert with Australian representation, but small packages of support that make it possible to bring their technologies to Australia, which has the multiplier benefit of deploying solar faster, which unlocks then another layer of energy transition benefit. And I was really interested in your reflections on what Australia's positioning here means for our future, if you're both able to comment.
All right, sure.
Frankie won the mic battle.
Okay. So, I'm sort of taking a lot of inspiration from some of the thematics that have been actually very current in conversation here while we've been at COP. And one of the things that's on our investors' mind, and I agree, Anna, Australia is an attractive investment destination on energy transition, renewables. I think there is more we can do to bring down the cost of transacting in Australia. So I think, approvals, that's a live issue before the Parliament, but time adds cost. And so, and I hate to labour this point, but our members' responsibility, particularly for super funds, is to get the best return they can for their beneficiaries. And if that means investing in renewables in other countries, they will do that. We are an attractive destination, but there is more we can do to shore that up. I think when you then, look at some of the more prospective industries, so the Future Made in Australia agenda, the longer term prospects there are very exciting. But right now, are they investable at scale? I would suggest not. And that's because we've done some of the policy work, but not all of it. So I think the initial sort of Future Made in Australia package of production tax credits, that's in one sense, that's paper money until the thing actually exists and you can claim that incentive. But what's missing from this picture at the moment is the strong demand signal and requirement. And so I think in our view, for these kind of projects to be investable and for institutional investors to take ownership of these assets in the long run, which would be what makes sense for Australia, is that we need to see some more movement in committed offtake for these for these commodities, if you like. And so what's really exciting about that, though, and the message that we've been sharing and we sort of see happening around the COP, is that not only is Australia kind of well placed to lead the conversation on ambition and how we take that forward, but we have a role in decarbonising our region through supply chains, and as well as that kind of broader global context. So if Australia hosts COP31 next year in partnership with the Pacific, I think there is a huge opportunity to lean into the Asia Pacific region, work with our key partners. I think Kushla talked about South Korea's recent efforts. They've just announced that they're closing all of their coal-fired power generation by 2040. That has big implications for our exports. And so here is the positive flip side to that story. We can start making deals, hopefully with South Korea, with Japan, maybe China. But I think it's going to require governments jointly and collectively, and maybe that's bilaterally or in a multilateral setting, to commit to offtakes, because that's what's going to be necessary to de-risk investment.
Agree.
Maybe just a follow-on support of that offtake. I mean, the last transaction we announced, we were only able to do that because of a long-dated offtake that was given to us by Rio Tinto. Now, they underwrote a big proportion of the revenue stream in a carbon and farming program. So, that just, whilst policy certainty is great, contractual revenue certainty is better. So if we can get that established, that's what we need. But that was, but they're not mutually exclusive. We could only get that offtake because there was a confidence in the regulatory framework. So they go nicely together. But I would say if there was one thing I would ask all of us to think through is, the theme here is COP31 for Asia Pacific. A lot of our specialist investment vehicles have a lot of capability built in. How do we export some of that capability to our Pacific partners? And what I mean by that is we're also very good at crowding in capital because we know this region. How do we crowd in European capital, North American capital, and other parts of capital, including Australian capital, to help our Pacific partners and East Asian partners to how do we use this model more creatively is what I would propose as something for us to think through if we're going to become a regional leader in this space.
So I think the summary there is good start, keep going.
Yeah, and I completely agree with Heech's point there. I think there's already some really exciting thinking about the role of blended finance and really leveraging, the expertise of some of our special investment vehicles. I think it's also fair to say there's probably a conversation there about what the enabling environment needs to look like for the likes of CFC, but other SIVs. I mean, Export Finance Australia was likely to play a key role here as well. But CFC have the expertise in energy transition in some of this. So the Fast P initiative with the Singapore government is really an interesting development, and so I think just couldn't agree more. And I think we need to start doing the work now to lay the groundwork for what a bigger kind of flagship initiative like that could look like.
Yeah. We have enjoyed over the last 5 years or so around 5% decrease in emissions intensity in our power generation sector. Let's see more countries enjoy that level of decarbonisation and success. Are there any? I've left us very little time for questions, I'm very aware. Does anyone have a question just before we? Yeah.
Thank you. Brendan Bateman from Clayton Utz in Sydney. We've talked about the gap in order to achieve our NDC target. That means there has to be new policies, and we've spoken about that in general terms. The government said it won't expand the safeguard mechanism, so it's not going to apply to more facilities and have a broader impact. What each of the panellists would say would be the preferred policy, you get to pick one, to close that gap?
So, I mean, I think we would love to see a carbon price. And whilst I think a lot of people in this room would agree with that, I think ultimately we also shouldn't let the perfect be the enemy of the good in the next little while. And so I think we will be pursuing ambitious expansion of the safeguard mechanism. I think it's time to reconsider whether electricity generators should be brought into that. So there are various opinions about the elegance of doing that, but the absence of a carbon signal in the electricity market is going to be a problem for investment in the near term, especially with the proposed extension of aging coal-fired power that has a very low LCOE because they're legacy assets. So that's one. You've obviously got the new vehicle efficiency standard up for review in the next year. Whilst that's relatively new, so I mean, I think we should be looking at doubling down on the energy sector and a carbon signal there. The safeguard is the obvious thing, and I think there's a question then around where else you could expand the safeguard to either cover more of industry, to also cover other parts of the economy that have no carbon signal in them. Heavy transport is one kind of, heavy transport's one example of that. So I think those are key things, but I also think there is no policy driving electrification in other sectors. We should be banning gas connections to buildings, to new buildings. That's just like the biggest no-brainer. It's a little, political, but there are things like that we should be driving electrification more broadly.
Maybe just quickly, I think we need to safeguard our safeguard mechanism, but make it stronger. It's a core piece of legislation, so that's one thing. But this sounds really boring, but it's right up your alley as a lawyer. I actually think we should make mandatory disclosures for scope 1, 2 and 3, and also for nature. Once you start doing that, mandatory, the market will start to move because of rep risk, social license, all of those issues. I think at the moment it's just voluntary. So I think we need to get to a much more mandatory level of financial accounting, carbon accounting. No, I know, but for all sectors,
Uh,
not for chosen sectors.
And my add to those, absolutely, keep going with the power sector and the adjacent sector specific interventions, but invest in initiatives that build social licence so that we have more Australians on the side of the transition and more communities ready to host transmission and renewable energy, and be supportive of the changes that need to play out. So please join me in thanking very much our fabulous panellists. Peach, Frankie, I'm Anna, and grab us for a conversation after. Thanks.